Hi everyone, this is Dr. Chandrakantha, Professor in Commerce. I'm here to simplify the learning of accounts. Let's start with the introduction on accounting. I know many of you are having a lot of questions in your mind. What is accounting? What is the importance of accounting? How to prepare it? What is the format to be followed? Like many questions you are having, I know today it is gaining a lot of importance, and also we have a software like Tally and all. So why the people are learning accounting? Because this is the basic, it is required, most important for all business people to record their business transactions, because they cannot remember all the transactions, what is carried, what has happened in a particular day or in a particular period of time. So therefore they have to make a proper record of transactions. For that sake accounting is important. So how they are going to do it's a systematic, organized organized way they are going to make a record. So for that we have to understand what is the meaning of accounting. Let's start with the meaning so that we will understand what is the role of accounting in business and other various entities. Accounting is the process of recording, classifying, summarizing, analyzing of financial transactions to ascertain monetary result of business. See, the meaning itself gives the complete picture of accounting. It is the process of recording, it is the process of classifying, it is the process of summarizing, it is the process of analyzing for the purpose of communicating to all the stakeholders. That means it's not just recording. Recording should be done as per accounting principles, and there should be a classification in the sense we have to follow the principles, accounting principles, where we have to identify the different types of accounts, we have to identify different kinds of accounts, and we have to make a classification based on debit and credit. So I don't want to give the meaning of debit and credit here. Like in maths we have a plus and minus, no, like here also we have a debit and credit. Later I'll give in detail the meaning of debit and credit. Summarizing whatever that you have recorded as per accounting principles to be summarized by having financial statements. By preparing various financial statements we have to summarize the records, what we have done, that is to be summarized, and the summarized statements to be analyzed. Why we have to analyze? The analysis will helps to understand what is the financial position of the organization, what is the ultimate result of the organization, either you are earning profit or loss, how you are able to expand your business, and what are the other measures to be taken to strengthen yourself. Like many things we have to do. So that's analysis to be done, and later that is to be communicated to all the stakeholders. There are many people who are involved in the business, directly or indirectly. People are involved in the business, they want to know the result of the business, like maybe the investors, we call it as investors, like shareholders, and even the suppliers, the people who are supplying materials to the organization, and even the employees who are working in the organization. Everyone, many people, even the society, the public, the tax department, the government. So many people are interested to know about your organization. That communication should be done in a systematic pattern. For that we have to understand accountancy, that we are going to able to understand only when it is done properly in a systematic and organized way. When it is done, we are going to understand the proper accounting system. So what is the need of accounting? That we'll understand by going through the various objectives given here. Okay, so what are the important objectives of accounting? To have a proper record of financial transactions, to understand financial position of business, to ascertain business result at a particular period of time, to provide information to stakeholders, to take rational business decisions. As I already said, accounting has its own importance. That's what we call objectives. So that means it should be recorded, and only we are going to record financial transactions, monetary transactions, like a cash paid, purchases done, rent paid, salary paid, like whatever the financial transactions happened in the business, that is to be recorded. Okay, so only monetary transactions we are going to record here, and that helps to understand your financial position, solvency position, and what are the total assets and liabilities of the organization, so that you have to know at the end. That is possible by going through these financial statements. Okay, and at the end you have to understand what is the ultimate result, final result of the business at a particular period of time. That is possible when you make a record, proper record of books of accounts, day-to-day transaction, whatever that is there, you have to do. You can find the result at the end of a week, at the end of a day, at the end of the month, of yearly or yearly. So as you wish, that can be done. Okay, and it provides information to stakeholders. As I said, there are many people who are interested to know about your organization. So like creditors, those who are given loan, funds to your organization, people who have invested money, capital, who have invested money in terms of shares. So many people are interested, and for them you have to give the information. Even for the tax department also you have to give the information. Okay, so for that you have to make a proper record of transactions, and finally you have to take your decisions. Okay, find proper decisions to be taken for expansion of business. We call it as a financial plans. We have to do financial plans to prepare an effective intelligent financial plans, maybe short term or long term. There should be a proper record of books, and all these records will help you take the financial decisions. Let us understand the accounting format, how the books of accounts are maintained. And this set of books of accounts, what we are going to maintain is called bookkeeping. Okay, the set of books what we are going to maintain to record the transactions is called bookkeeping. So as we know, it's a recording, classifying, summarizing, and analyzing of financial data, financial transactions. Only we have to find the financial transactions which are there in the organization, and those transactions to be recorded. First book is called journal book, where you are going to make a day-to-day transactions, and is also called day book. It's also called day book. Every day whatever happens, immediately the transactions are recorded in journal book, and later those transactions are transferred to ledger accounts. The process of transferring transactions to ledger is called posting. The process of transferring the entries from journal to ledger, this process is called posting. That is to be done, and the balances what you are going to get in all these ledger accounts will be transferred to trial balance. Through trial balance we are going to prepare final accounts. So these final accounts will helps to understand your financial position, and for that you have to prepare various financial statements. This includes trading account, profit and loss account, and balance sheet. So trading account gives the result of gross profit or gross loss. Gross profit or gross loss. That means if you are carrying any manufacturing business, where you are going to carry trading activities, basically there you get gross profit or gross. If it is not a manufacturing unit, straight away if you are a dealer like that, straight away you can move to profit and loss account. Is also called income statement. So this is also called income statement. So where you are going to find the net profit or net loss. Net profit or net loss of the business. Okay, so where you are going to consider all revenue, expenses, and revenue incomes. All revenue, expenses, and revenue incomes are recorded in the profit and loss account. And finally you are going to prepare a balance sheet. Balance sheet is a statement. It is a statement which has a list of assets and liabilities. assets and liabilities. So the list of assets and liabilities, and the total assets of the organization match with the total liabilities. So that means the total assets will be equal to total liabilities. So if you record the transactions properly as per accounting rule, if you record the transactions as per accounting rule, so by following debit and credit concept, later I'll explain what is debit and credit. So by following debit and credit concept, if you record transactions properly, finally when you prepare your balance sheet, the total assets value will be equal to total liability. It happens only when you make a proper record. That's a systematic record. So to learn this systematic record, we have to understand the various types of accounts and also accounting rules. So in the coming video, I'm going to explain about the various types of accounts and also accounting rules.